Awesome. All right. Well, thanks everyone for joining. I know this is both late in India. Oh, sorry. Let me ask. Can you unmute yourself now?
Yeah.
Okay, great. Awesome. So thanks everyone for joining. I know it's late both in the United States and early in India, but this is the time that sort of works for both zones. And Aviral, thanks so much for making it so early in the morning. So I'll quickly introduce Aviral to everyone who's attending, and then we'll get started. I'll just share the structure of what this conversation will look like. We'll also have some time towards the end for some Q&A. So Aviral is an early stage investor with Venture Highway. Venture Highway is an early stage seed fund that wrote the first institutional check in market pioneers such as Misho and Moglix. He's been investing in the Indian ecosystem for about half a decade in edtech, SaaS, consumer tech, etc. He's also founder of a newsletter and blog called Junior VC, which started off in 2018. It's a new, bi-weekly newsletter, uh, and it's eventually sort of shaped up to be this quite powerful platform in the Indian tech ecosystem. And if I can add here, Aviral and I also went to high school in Pune, so we have that bit of shared history. So it's obviously great to connect with Aviral after all this while. So Aviral, with that, the structure for this conversation is would love to have some opening thoughts from you on how you have sort of grown. I know you started out as a writer on Quora, then you sort of moved on to LinkedIn, and you've really sort of become one of the influencing voices in the Indian startup space. Would love to know about that journey, about Venture Highway, and then for the rest of the folks who joined in, I plan to ask Aviral some questions around how he sources his investments, what is his investment criteria, learn from him about what sort of companies he's invested in, what his thoughts on the broader tech ecosystem in India are, and finally his commentary on what India might look like in the coming years. So that's how we structure it. We keep the conversation for about 30-35 minutes, may plus minus depending on audience Q&A, and then around the 35th mark I'll open it up for questions, and we can wrap it up from there. So hopefully it's a sweet spot in terms of timing where it's not too long of a conversation, it's not too short of a conversation either. So with that, Aviral, again, thanks for making this work. Would love to start out by hearing from you your opening thoughts, a little bit about yourself, how you got into the tech space, a little bit about Venture Highway, and a little bit about the Junior VC.
Awesome. Thank you for having me, Anand. Good to be speaking to all of you. I think very early on in life, Anand and I, as I said, we went to high school together. I'm from Pune. For folks who are not well acquainted, it's a fairly large city near Bombay. I would say it's like the Chicago of India, or at least that's how my previous boss describes it. Fell in love with science very early on. Wanted to do something in physics, so I ended up joining IIT Bombay. Studied engineering physics there. In my second year, had an internship experience where I was like, boss, I can't sit behind a computer and run models. So started working on a startup, got my first brush with business, realized that maybe that's what I want to do. Ended up going to IIM Ahmedabad for my MBA, did a private equity internship, also did a VC internship, and that's how I got into venture. And I've been here seed investing for the last 5 years. I think I'll probably complete 6 years today. 1st April 2016 was when I started my venture journey. Along with that, I've been writing, like Anand mentioned. Started off on Quora when it was very young. Was a fascinating platform for the first 4-5 years, but then it kind of lost its way. Shifted to LinkedIn, started building out this platform called a Junior VC, where we talk about startups and tech. And I think the core for me with whatever I've written is I wanted to make sense of things that I was lucky enough to do. I would say I went to reasonably good colleges, had a good job that a lot of people wanted to understand. And I felt like we were a minority generally, so nobody really spoke about what it's like to study at an IIT or IIM or do VC. And that really was a core driving force. It grew to something more where I think, helping people at scale. I've realized that, media generally allows you to help people at scale, right? That kind of leverage is insane. So I've been writing and I've not stopped. The junior VC is now 25, 30 member team, all volunteering. We do around 150,000 monthly actives, just focus on startups and tech in India, which is fairly niche, I would say. But yeah, I mean, it's been a good journey. Presently focused on finding the next breakout companies in India. I think 2 years ago, maybe India was a little of a backwater for a lot of people, but I think the last couple of years, especially in the pandemic, India has become a very, very hot market. I think everyone's noticing it. It's funny that a lot of my friends in the US still think of it as an emerging market. It's not an emerging market in tech, at least. I think we've done almost 60, 70 billion of investing last year, have more than 80 unicorns. And I'm unicorn hunting. So, we're trying to find the next big breakout companies at the seed stage, which probably is the hardest, I would say. And that's what keeps me excited about the next decade here in India.
Well, thanks for sharing, Aviral. So we had a few more folks trickle in. Aviral was giving a quick introduction to himself. Could you also tell us a little bit more about Venture Highway in terms of, if, to the extent that you can disclose, how big is the fund, how many sort of investments you'll have made, and then I'll sort of go on from there to ask you more questions about,
Sure. So we are a very young fund. In fact, we raised our first institutional fund a couple of years ago only. Prior to that, it was, the founding partners, Neeraj and Sameer. They were investing their personal capital that bootstrapped. They essentially were angels, then they became super angels, and then it became a fund. Our first institutional fund was 80 million. Like you mentioned, Misho Muglex, category creators. We've also done ShareChat, Cred, Airmeet, Cars24, FamPay, bunch of companies that have essentially defined the category that they played in. We are in the process of raising another fund, which I can share that it will be larger. And the reason is seed investing in India has again expanded and become a lot different, right? I would say 3-4 years ago when I started, seed was 500K. Maybe even 2 years ago, it was 1.5 million. Now you are seeing seed rounds at 3 to 3.5, 4 million as well, right? And this is not second time entrepreneurs. This is probably first time entrepreneurs who are, building for the very first time. Obviously, if you have a second time entrepreneur or serial entrepreneur, they're able to raise even a 20-25 million seed round. But the overarching thing here is that most of the pricing, as well as in terms of check sizes, they've started to migrate towards what's the level in the US, right? So a seed round in India is not very different from a seed round in the US. And to essentially compete, I think you need to be able to write slightly larger checks, which is why we are moving in that direction. We are typically seed only, unlike other multi-stage funds who do seed, Series A, and I think there are more Series A funds in DNA when there is some PMF, some early understanding of how the product will evolve. And I'm using some terminologies like PMF in case folks are not aware. I can skip the jargon. So most funds tend to be like Series A in India, very few seed funds, and we want to be like that specialist seed fund, help the founders in the 0 to 1 stage when they're just paper plan, team of 3 or 4 people, and help them out in the early stages before they reach that PMF stage. So in terms of focus, we are very, very dedicated seed fund. In terms of sectors, we do almost everything in tech. We've not done a lot of deep tech like robotics or space, and we've also not done consumer brands, which is your D2C brands. I think apart from that, everything's been fair game for us. So we have a very, very wide sector exposure, fintech, human capital, edtech, e-commerce, industrial, B2B, SaaS, everything. So fairly horizontal sector agnostic fund. But in terms of stage, we're seed and seed only.
And again, for the folks who've just joined in, Aviral was giving us a background both of his own journey and of his current the fund where he works as a venture capitalist. And before I move on, Aviral, I just want to sort of acknowledge how entrepreneurial you have been in your own journey as an investor. I don't think there are very many investors who have your sort of following, your sort of reach. And you've all sort of built that up entrepreneurially. So congratulations
Thank you.
on your journey so far.
Thank you.
You mentioned something in your introductory remarks about how you are looking for the next unicorn yourself. So when you are looking to invest in companies, what are what do you look for? Are you looking for the target market sizes? Are you looking for the team? Are you looking for unit economics, prototypes? Like, what is it that makes you feel like, hey, you know what, this can be a potential unicorn?
Right. No, that's a great question, and I think nobody actually knows the answer. But I'll fathom some sort of approach, at least the mental models I use, right? I think venture investing as well as life is all about hypothesis testing, right? So you come up with a hypothesis and then you test it out. What I've seen in venture and the way it is structured is that there's a very strong game theoretic dynamic, which means that the entrepreneur is judging whether the VC will help, and the VC is judging whether the entrepreneur is actually going to stay true to her or his claims that, hey, we are going to build a big company. So the reason why, you have stage financing is this, that both sides don't have perfect information and things like that. So, it's fascinating how VC has generally evolved. And it's a hypothesis test, right, on both sides. I think in terms of what to look at, there are, the three schools of thought. And, if you look at the history of VC, I would say there are three people who essentially defined these schools of thought. There's Don Valentine, who founded Sequoia, who says market is king. There's Arthur Rock, who funded Apple, who says people are king. And there's Kleiner Perkins, Eugene Kleiner, who says that product and tech is king, right? And this three trifecta is, essentially what you look at in venture. I think over the last, let's say, 10 years, because seed has moved so early, like I was saying, this game theoretic dynamic is that if somebody gives an entrepreneur capital on a paper plan, the other VC, if they want to get in, they're like, hey, I don't even need a paper plan, you just come and talk to me. And essentially what is happening is now you have founders who are getting funded even before they've left the job that they are in, right? They're like, hey, I'm planning to think of something. And then the VC is like, okay, here, take my money, right? So you're going backwards. And why I'm sharing this is because the product is becoming less and less important in the seed stage dynamic. Obviously, it remains important at the later stages, but at least where I operate, there is no product sometimes, right? It's just product thinking. So I think at least what we tend to focus on generally is the team first, because that's what is there and very clearly visible. In fact, even the market and the approach might change. The overall market might remain the same. For example, Meesho, they started as a group buying thing, then they became a pin-based company, then they did social commerce, and they've even pivoted now to become like e-commerce focused. So you can't really say that this particular model works. So the founding team is the most important, then the market in which they're operating. And the question we ask is, can this be a very large outcome? And for a seed fund, why that matters is, just simple return math, right? Can I see this company become a unicorn? That's the question I ask. And if the market is not large enough, perhaps, or if we can't model it out to be large enough, it may not be a venture outcome. and then you finally have the product. But like I was saying, in seed, it's become less and less important. It's just the product thinking, the pain point, the solutioning, and there's not really anything most of the time. um, Now, when you have this trifecta and these three things, obviously you can't just say, "Hey, good founder." What constitutes a good founder, right? At least we have a very detailed, I'd say, framework for evaluating founders. We look at them for their clarity of thought, their obsession, their customer first nature, their execution ability, resilience. I'm talking about these traits because we actually look at these. And why they're important is because we are trying to model out whether this founder can actually build a large outcome, right? Are they hungry enough? Do they have the right skill set in this space? Can they execute? Can they raise money? And it's so hard to model all of this out, because it's very difficult to actually tell before anything happens that a founder could do that. And like I was saying, the game theoretic dynamic is VCs competing with each other. So they've compressed when a founder can raise money, and what has happened due to that also is the time in which you can make a decision, right? So now imagine I have to take a call on a person who I've met for the first time in 3 days, right? So you have to basically use deep reference checks, the calls of the founders. But I think, you generally learn about a founder in 9 to 12 months, right? The first year is when you actually see the whole spectrum of founders' behavior, both the positives, the negatives, everything. So I think, like, why I'm talking about this is the founder is the most important for seed stage investing, and then it's the market in which, are there profit pools, is it large enough, there's growth, etc. But we focus a lot on the founders. Sometimes even if we can't see the market but the founding team is spectacular, we'll invest, right? So for us, it's like people. And if we can establish that there's a decent sized market, it's fair game. But those are the two things that I would say are most important.
Well, I have a quick follow-up question on that, but just to again put some structure around the conversation for everyone who's online, the way we're going to have this chat is we're going to try to cover four broad themes before we open it out to Q&A. The first is understanding how Aviral and his fund invest. What is their thesis? The second is understanding, what the sort of paths to exit for some of these companies are, not just in their portfolio, but in Aviral's sort of understanding in the broader Indian tech market. The third piece is understanding from him what happened in 2021 in India and how that momentum might or might not sustain, and then finally get some thoughts on India and India's fundamentals as a market. So Aviral, on this point on founders, you mentioned that you do try to look for things like tenacity, execution capability, customer centric focus, and whatnot. That's one thing to say, but when you're trying to evaluate for a seed check, and some, as you mentioned, you are open to also evaluating first time founders, right? So when you're looking at first time founders, and some of these people can be in their 20s, I'm not sure what the distribution is, so I'd love to know what the age profile distribution is. But assuming that a large chunk of people who are coming up with companies are still on the younger side and might not have track records of their own. Even so, for example, if you don't have a track record, how do you even do a reference check, right? And a lot of these people, I think my reading is go to good schools or work at elite firms and then decide to start up. So with those kinds of profiles, how do you actually pick out traits like tenacity, execution capability, customer-centric focus, and the other attributes that you mentioned?
Right. No, very good question. I'll try to answer it. I think in terms of age, I would say late 20s, early 30s is the median, right? So there's enough work experience to do that. But then you have folks like Fampe, who I'm close to. They were in college when they raised their round, right? Literally last year. So no work experience, nothing, right? Um, they've not done anything before that. I think a few things you can actually understand without any work experience. For example, customer obsession, being customer first. Like I take Fampa as an example. They understood the problem statement because they themselves were consumers, right? What FamPay is a neobank. It started as a neobank for teenagers, right? Um, so I think with them, they understood the problem statement so well that we were like sold, right? They understood that, hey, we have some monetary needs. We don't want to be dependent necessarily on our parents, but our parents want to have visibility on what we are spending. They very clearly articulated the problem statement, and they had done like a ton of customer research. In fact, they had early users even before they pitched, right? So how, as a first time founder or a first time entrepreneur, do you actually create that feeling in an investor that, hey, this person knows what they're doing, is show some track record, show some traction, show some product, right? That's what FamPay did. They were like, hey, here's a product I already have. Here are some early users. Would you like to come on my journey, right? So when the founder is like super young, or they don't really have track record, they have to demonstrate it in some other way. So they will use this. And I think that's been the case with most younger founders, right? They will create some sort of MVP that makes it easier to back them. And I think the interesting thing today is that MVPs have become very different. They're not apps or prototypes. They're Discord servers, LinkedIn groups, Twitter threads. You have these new kinds of MVPs where customers are already available. A person's built an audience, and then you can actually demonstrate that there's a strong early market fit without even having a working product. So I think it's become so two things. The first is when the founder is not experienced enough, I would say they would come up with some sort of prototype or working product or some PMF or some MVP that shows that they understand the space well enough. And nowadays, it's become so easy to start with an MVP that it's reduced the barrier for a younger person to actually start a company. So those two things are happening. Um, so yeah, I mean that's how you'd invest in someone who doesn't have a track record or is very early on.
And very quick, what's the age profile of founders that you come across within your deal pipeline?
Yeah, I think it's fairly like I mentioned the median.
Yeah.
I would say like I'm not that old, so I tend to get slightly younger folks. For some reason, like few months ago, I was getting a lot of teen entrepreneurs, maybe because they read something I wrote. But it was quite fascinating speaking to like a 17-year-old building an ML product and things like that. But generally, I would say mid 20s, late 20s. Again, that's the profile of entrepreneurs that I tend to see. And in general, the ones that we fund is also very similar. Median would be like early 30s to late 20s.
All right. And so before we move on to the next theme of the conversation, you know, could you share with us how, at least some salient points about your investment thesis? So, for example, what areas specifically in the Indian tech ecosystem are exciting to you and why?
Right. Um, in terms of sectors, I think, as I said, we're looking for great entrepreneurs anywhere and everywhere, whatever they could be building. I personally look at every market in Maslow's hierarchy of needs. I mean, it's a wonderful framework. I think India has progressed from the basic layer of food and water and things like that to, let's say, health and security. And I think that that's going to be a big theme in the next 5 to 10 years, right? You'll have education, as you can see, they're like massive educational companies, probably the largest in the world coming out of India. You have insurance, fintech, etc., all breaking out. I think that's going to be a very big theme over the next 5 to 10 years. You just started seeing the early days. Um, Similarly, you have companies' hierarchy of needs as well, which follows the same process. And I think human capital, making people work more effectively, more productively in a more, I would say, integrated manner is another area that I think we are looking at. So I think layer two, in terms of both companies' hierarchy of needs as well as people's hierarchy of needs, that's going to be like the India story over the next 5 to 10 years. And I think what we do is, there are two kinds of approaches. There's a prepared mind approach, which I would say Jim Breyer at Axel kind of um, promulgated, which is saying that, hey, understand this market very deeply, and then when you meet a team, just close it. I think it's a mix of that plus just looking for great founders, because sometimes at seed stage you can't really predict a market before it comes, right? We are like at the edge of innovation. So if a founder comes and says, hey, I'm building a DeFi as a service for the global market, maybe you've never ever seen a company like that, and you can't really come with a prepared mind in that situation. So in that case, you're again looking for the best founders. So we always use the founder as the beachhead. In fact, if the founder is seeing an opportunity, we try to understand why the founder is seeing the opportunity. And I would always focus on that first. Obviously, I told you in terms of thinking macro what my view is, but I feel like founders will find some hooks or some paths which we have not thought of as ourselves as well. But that's broadly in terms of sectors as well as the approach in terms of which categories we might go after.
Yeah, no, thanks for sharing that. So moving on to the second theme of, okay, so once you've made the seed stage investment, the company grows and finds product market fit. So what happens after that? Do my sense, and you can, please feel free to clarify this, but my sense is that in your day-to-day work, you might not be thinking about the long-term exit paths of these companies, given that a lot of them are still figuring out their essence. But given that you do, have you have very sharp commentary on the overall market in India. Would love to get your sense on where a lot of these Indian tech companies that have now achieved unicorn status, or maybe even at the Series A level, what are the end games for some of them? Are the end games for them to be standalone companies? Is it to get merged into one of the big Indian conglomerates, Geo, maybe Tata, get bought out by FANG companies? Like SimSim was acquired recently by Google, not recently, but a year ago. So what in your view is the long-term sort of game for, Indian tech companies?
I think the goal for any company is to be a standalone brand, standalone franchise. I think every ambitious entrepreneur that we backed or I've seen, they want to build an enduring company that stands on its own for as long as possible, right? I would say um, enduring brand name or enduring franchise is what they want to build. In fact, there's an interesting observation that I've made. Founders that talk about exits in their early stages, which is especially seed, they're not thinking of a long play, right? And then it becomes difficult for a VC to get a return, and then it just becomes hard if you're back an entrepreneur who's thinking small. Um, so the goal for every founder who is trying to build a large outcome is a standalone franchise. Nobody wants to get acquired. Nobody wants to merge. The dream is to usually go public, which means that you are sort of free from the fundraising cycle of private capital markets. But again, being a public company has its own challenges, and I think public markets have become a little idiosyncratic in the sense that they're driven a lot by short-term thinking. In the sense that a lot of investors are just there for a quarter or a year, and they're looking at, hey, what happened in the last quarter, what happens in the next quarter, next year, versus private investors are 5 to 10 year horizons. But I think the goal for every founder is to build an enduring company, enduring franchise, possibly take it public, definitely make it profitable enough for it to sustain by itself. But that's the goal for sure. I mean, there's no doubt about it.
Yeah, I mean, that might be perhaps the founder's perspective or even the early stage VC's perspective. But as it practically plays out, there are market forces at play beyond the founder's control. So from that standpoint, slightly disconnected from both the founder or the early stage investor, how do you generally see the Indian ecosystem evolve? Are these tech companies, do they have the potential to be standalone firms? Or like we are seeing acquisitions both by Indian conglomerates and big tech companies abroad. So what's your sense on how might it practically unfold?
Right. I mean, I think there's one side which is the founder doesn't want to sell, right? Even when Walmart got interested in Flipkart and acquired the company, from my understanding internally as well as externally, it it was a great outcome for the ecosystem. But even then, the founders were like, "Hey, can we build a bigger outcome here?" I think your question is more from the side of, does a market allow for a standalone Indian company? I think that is becoming increasingly true. Maybe 5, 7 years ago, the profit pools in digital India were not large enough. They've increased and they'll keep increasing. The question really is, do you see an Indian company becoming profitable? Are there enough profit pools in the digital market? Will they be able to profitably service both acquisition as well as delivering to these customers? Can they do that? I think the answer is yes. And it will become even more true in the next 5 to 10 years. So my view is that increasingly they will become standalone. While I understand the rationale for mergers and getting acquired, the reason is generally that, hey, I don't have a balance sheet that can finance me forever, which is why Flipkart got acquired by Walmart, because Walmart has this gigantic balance sheet which can finance Flipkart for years. But I see Indian companies becoming profitable faster. And then, they don't really need to be acquired. That's my view. The reason why the M&A happens is precisely because they cannot finance themselves.
Yeah. Right. Put another way, do you think Indian companies in the longer term are better off building for India, which can have all sorts of idiosyncrasies? Or do you think if they're better off building the products in India, finding product market fits in India, but then selling it abroad, selling it in higher margin countries, maybe Western Europe, the United States? How do you see that piece evolving?
No, I think that's been the path. Like Infosys also was a startup, right? And they've used that path. I think India exports more IT services than Saudi Arabia exports oil. 150, 160 billion, right? Which kind of blew my mind. I was like, wow, pretty large. And the reason is essentially that the profit pool margin is much better. But I think if you want to look at a story very close by in China, where the consumer market became so big just because of GDP per capita expansion and wealth expansion, where the consumer market itself was so large that the companies could build internally, right? What they did was they took an export route, which is manufacturing low cost stuff, got a lot of wealth in the country because of that, because they were building for the world. I mean, manufacturing also, what China did was building globally. And then they built wealth internally. That consumer market became so large that it became possible to finance companies based in that consumer market itself. So I think we'll follow that path too. We've taken the services route, which is exporting services. And I think that will always be a path because India has both talent arbitrage as well as cost arbitrage. I think the cost arbitrage is becoming lesser and lesser, but the talent arbitrage will remain. We have like this huge engineering pool, which very few countries have. But over time, I would see that Indian consumer market is going to become the focus for a lot of large companies, just primarily because the consumer market is big. I mean, retail grocery will touch 1 trillion in a couple of years. You can fairly well build a $10 billion company, $50 billion company in that itself. So I think it's a question of evolution. I think over the next 10 years, I'd see a lot of India consumer focused companies coming up and who are able to sustain as well. And I think that's just by virtue of how we will be as a country.
My sense also is that a lot of the Indian products or companies that are built in India, the products and services they're building for India are very unique to India.
Right.
Right. So, for example, DealShare that does this, get your community to buy groceries together at cheaper prices, or Meesho, for example, enabling women entrepreneurs at say a lower sort of income level. These seem to be very uniquely Indian products. And I wonder if these companies, even Urban Clap, for example, now Urban Company, who's basically professionalizing home services, I wonder, if these can even be exported abroad. And I'd love to know what you think about that. Whether, these companies even have offerings that might be relevant in the US
Yeah,
or in Western Europe.
maybe they don't need to, right? Deal share obviously would be a Pinduoduo kind of inspiration in some sense. A lot of social commerce in India is, in some way, I would say, like Meesho wasn't, but I'm seeing a lot of newer age companies that are either inspired by Meesho or Pinduoduo. Now, if you look at our per capita, it's $2,000. We are a $1 billion country. If we expand to $5,000 or $6,000 over whatever time period, that's another huge 4 trillion getting added into the market, right? We have an insanely large potential in terms of like adding 2 or 3 times our GDP, which that GDP per capita expansion, where you just like add $3,000-4,000 to someone's income, and then you suddenly have like 3 Indias, right? So I see like a lot of stuff still remaining in terms of future upside. And answering your question, maybe they will not need to serve a market outside India, but there are I would say homologous markets, or as you would say in machine learning, when you are doing k-means clustering, the clusters of markets which have Indian demographics, they're probably around us. So you have Pakistan, Bangladesh, Nepal, Sri Lanka, Southeast Asia. I'm seeing a lot of Indian software companies actually exporting to Thailand, Malaysia, Vietnam, even I think, I don't know if you guys read, Nepal started using UPI. So I see India becoming like this dominant, um, creator of products which can be exported nearby, where low cost delivery of products and services is important. Um, so I would say the TAM expands that way. It may not even be necessary to expand beyond India, which I would say like operates like Europe in many ways. But if it has to, this could be a path for us where we become like the center of tech innovation in this region. And I'm already seeing it. Like if you look at a lot of Southeast Asian entrepreneurs, they're Indian. They're not even Indian origin. They like I have a friend who studied with me in college. He's building a very large company in Indonesia, right? And he's not the only one. There are like 4 or 5 of them. They're all Indian guys. Um, and I see that kind of thing happening in Southeast Asia, where you take like a Misho and replicate it in Vietnam, or you take a Katabook and you replicate it in Indonesia. Um, and I see India becoming like this core place for talent, which exports to this region. Middle East, MENA, I would say like Dubai and that region as well is another target market for a lot of Indian companies. So maybe the US might not even be relevant from an export standpoint. And the reason I told you was you build a low cost product, you're servicing a country where price sensitivity is really high. And then you have like a lot of countries around you which have the same profile. So then you can export to them.
Yeah. I was just looking at the watch and I see we've already touched the 40-minute mark. So if folks have questions, please raise your virtual hands. I'll call on you all. And as people raise their hands or think about their questions, Aviral, moving on to the next theme that I had in mind was what happened in 2021. It seemed to be clearly an anomalistic year. 44 unicorns. Is that because the West was printing money and somehow that money sloshed around and found itself in India? Uh, was it something else? Maybe the COVID pandemic enhanced or accelerated digital adoption, or something else. So would love to know your reading of what happened in 2021. And as a follow, even the second part of that question is, do you think that is sustainable? Do you think that that trend will continue into 22, 23, 24, even maybe 25?
Um, so the answer to many of these questions is you always look at what's happening in the world. Um, and India is a part of the world, right? So if you look at 2020, you had 200 billion of PVC money. In 2021, you have 700 billion of PVC money, right? So you have a 3.5x expansion. So let me answer that first. Why did that happen? And then we can go to India, right? I think you had a situation where interest rates had just gone to zero. Money was available for deploying anywhere, which meant that risk on asset classes, which is VCP and even your new age alt asset classes like crypto, became super attractive, right? So a lot of money started chasing equity in all forms, both public markets as well as private markets, because debt markets were not giving those kind of returns, interest rates had fallen. So equity saw a huge jump, right? So that's number one. Now you have equity seeing a lot of money coming in. Then you look at why did a particular asset class within equity, which is venture. And venture today, I would say, is very easily tech, largely. I wouldn't say it's a very accurate, like 100% tech, but you can say 70 to 80%, right? So you have equity, and then you have a tech asset class. So which you would have seen in public markets as well. Your fangs of the world, they just like gained market cap, like there was no tomorrow. The same thing happened in the private asset class. And the reason why tech suddenly became everyone's darling is that, oh my God, I can't live physically anymore. How do I engage and interact with everyone else? And the answer is digital, right? So the world was forced to move to digital, which is why there was a creation of tons of companies, tons of services that may not have existed. People moved entirely online. Um, and obviously, you'll see investors chasing innovation, right? So that's number two. So there's equity, which is a risk on asset class, easy access to money, went in specifically in tech because of the pandemic. And finally, if you come to India, India also saw a 3x expansion. So it was not um, bucking the trend in some sense. It was not lower or higher. It was just, I would say, average. But it's not necessary that India had to follow it, right? So why did that happen? I would say there are two things. The first is obviously people realize that India is a large market, and hey, there are really talented founders here. There could be a very big outcome. Let's take this market more seriously. And I think there was a very strong China effect as well, both in terms of China tech getting um, regulated and I would say arbitrarily like shut down started by their government. So a lot of money just stayed out of China for a couple of quarters. Like I think Q2 of or Q3 of last year, India raised more VC money than China, which has never happened before. And I don't think it'll happen again anytime soon, but that was the situation. So I would say India, people started realizing, hey, there's a $1 billion market here that's democratic, English speaking, and there are some breakout companies. Let's go more aggressively. And China, I don't have a basket where I can put money in China. So the next best thing is India. So I think these two things on the India level. So there's equity, there's tech, and then there's India. I think these three things came together. I don't think it's going to happen for a long time again. I think this year is going to be much lesser. In fact, my prediction, I mean, I do predictions as part of the AGVC team. We think that the number of unicorns is not going to be 44, it's going to be lower, but higher than 2020. And I also think the amount of PVC money coming in this year will be much lesser. I'm already starting to see that pullback is happening. As I said, the same reasons that made the money come in will also make the money go out. So China has started becoming more interesting again. Free money is going away. The Fed is obviously hiking rates. And I see that will affect us too.
Yeah, interestingly, I've been taking this class called Private Equity Finance here at HPS, and we're learning about LPs and their own motivations. And a lot of limited partners in the private asset class tend to be pension funds and retirement funds in the US and Western Europe. And a lot of these folks tend to have, their constituents are people with retirement ages that cap around 60, 62, and they have a lot of these obligations that are not able to meet through the public asset class. So hence there's also this additional sort of push to move more money into PEVC. So that's just an interesting observation in mind. So Ben, I see you have raised your hand. Let me just pin you to the screen so that you can be added on the recording. Yeah, please feel free to go ahead and unmute and ask your question.
Cool. Anand, thanks so much for organizing this with your high school friend. And Aviral, thanks for your time. For quick context, I worked in VC in America, obviously, worked at McKinsey, product, tech, all that. And I just want to say I'm a huge fan. I followed you on LinkedIn for like 3+ years at least. So I'd love to understand a bit more about a junior VC. So I guess a few questions on my mind. One, can you describe some of the early days when you were starting? I can't imagine it was easy early on before you had the reputation. And were you scared? Was it weird, that kind of thing? And then second, just more tactically, what is your personal writing schedule? And maybe more broadly, how do you allocate time between meeting founders, helping founders, writing, and how do you just think about your own time allocation?
No, absolutely. Thank you. Great to know. And that's, I think, the power of writing. You can touch people anywhere in the world. I still get surprised, and thank you for this. Yeah, I mean, I've been writing a lot, and there's my day job, which is VC investing, and a junior VC, which I would say is a passion project. I'll talk about both because you asked the same. You asked this question. I think in the early days it was quite hard. I would say one thing I have as a person is I somehow am very optimistic, and that's good in my job because I'm like optimists make money, pessimists sound smart, and I think being an optimist helps a lot. And why it helps is I don't easily get demotivated, or whatever people say, it doesn't matter as such. So I think once I got like hooked to writing and investing both, I just kept at it, right? I'm sure, like, I remember very clearly there were these some times where I was like, I don't know what I'm doing. It's just becoming super hard, and the hustle is real, especially when you're like young and starting something out. But I think the optimism also gets some fearlessness, and I didn't really care. So I just kept writing. And one day I actually got an inbound from Unacademy's founder, and he was asking me to become an educator on Unacademy, and I just like started investing. So I was like, let me be smart and say, why don't you send your pitch deck to me? So that was the first time I actually saw media like play out in terms of VC investing. So yeah, I mean, I think early days were quite challenging. I think what I did was I just kept at it. Um, a lot of people tend to get hamstrung by the fact that they don't say it explicitly, but they're like, will anybody read what I write? Right? They give lots of other reasons, which I don't really agree with. They'll say that, oh, I don't know if I can, I have the time or I can do this. That's all bullshit. I think it's because they are worried nobody will recognize them, right? And I think for me, the thing that works really well is I write for myself. And if I like it, it's fine. Nobody else needs to. It's okay. And somehow that tuning has helped me a lot. So I think that really helped me kickstart my journey. And then there's just compounding. It just played out. And I'm thankful. It's not necessarily everyone does, but I've like kind of smelled where the opportunity was and taken it that way. In terms of splitting time, it's a weekday weekend thing for me. I think work is weekdays, maybe late nights, and weekends is writing. Obviously there's time with family, and these things are important, but in terms of allocating my time, I would say I'd spend maybe 5 to 6 hours a week writing in some form. And writing doesn't necessarily just involve writing. It's about reading a lot and putting your thoughts together. I think one thing that has really worked for me as a writer is that I read like a maniac. I mean, like, I'm crazy. My wife's on the call, so she'll know. Like, there was this joke my parents told me that in India you have this thing where you go and give your clothes to the guy who irons it, and they put a newspaper in your shirt to ensure the crease is there. I even read that. So I'm like that crazy in terms of like just reading stuff. So I read a lot, and that really helps me in articulating a worldview, right? So I read about random things, deep science, the Ukraine war, anything and everything. And that's helped me become a better writer, because when you read good stuff, you know what good stuff looks like, and then you're able to like subconsciously write good stuff. So I think the writing process is also a bit like, it's not structured, it's very unstructured, but I made it a habit to write every week without fail, something or the other. I've become more active on Twitter because I don't really have the bandwidth to sit and write long stuff like I used to before, but I still make time to write essays maybe once in 2 weeks or once a month. But in terms of like writing, you have to start somewhere, get rid of the fear. And I think just two things matter. Being consistent, which is that I've decided that I'll write every 2 weeks, and being authentic. Like pick a niche and just talk about it. Don't need to write about everything under the sun. Like even today, even though I have scale, I still stick to my lane of startups, more or less. I mean, I talk about other things, but more or less that. So yeah, I mean, that's like the answer to both your questions. Slightly longer, but thought, I can cover both aspects.
Yeah, Ben, thanks a lot for asking that question. So Aviral, we are close to ending time, and before we leave, I'd love to ask you another question. Can you leave us with some interesting companies worth tracking in India, in your view, that might not still be at the level where they get press or they have unicorn status, but what are some of the interesting companies for you, and why are they interesting to you?
I should just plug Venture Highways portfolio. That is the best thing. No, I'll talk about a few companies that I think are interesting. There's one in our portfolio called Tula. I'm quite excited about them. Essentially like reimagining recruitment, and they're taking a recruiter first view. And the thesis is that tools have been either candidate first or organization first, but nobody's built for recruiters. So that's one company I'd strongly recommend. FamPay is one I mentioned. I think I'll talk about a few companies that are not unicorns, but could be interesting. There's one company called Dehat, which is an agri-tech full stack business. I think they could be a very, very big outcome. They're still not a unicorn, very far away from it. I think maybe in a round or two, they'll probably become a unicorn. But why I'm interested in them is India is a huge agriculture market. There's a lot of inefficiencies, and an agri-tech product could be, one that is very specific to India and simultaneously have a large outcome. So that's another company I think that's interesting. Yeah, I mean, I think these would be my top 2, 3. They're very different categories. But like I said, the Maslow's hierarchy of needs, you have recruitment, you have finance, and then you have like automation and food, which is a second level problem. I think these 2 or 3 would be interesting ones.
Yeah, I mean, since we still have 4 minutes to close an hour, and we have you on the call, so I'm tempted to sneak in one more question.
Sure.
Would love to close the conversation by getting your thoughts on India. I know you through your comments through this conversation and your writings, it's very clear that you're an India bull. But would love to get your sense on quick highlights. Big strengths for India, big weaknesses for India, and what's your view on how the next 5 to 10 years might evolve?
Yeah, so I don't know if you can share this with everyone, but I wrote this essay on India, which is called Long India. So if you just search Long India, Aviral Bhatnagar, Long India, you'll see to find it. I mean, it was this moment where I was like, I want to write something that captures all my thinking about India. And that piece is like an India bull piece. Obviously, I've talked about the challenges, but they articulate that the piece articulates what I think is the reason why we'll be so big. And I'll talk about both the positives and the challenges. I think in our life we get so caught up in the daily stuff that we tend to move a lot with noise, but we are still human beings at core, and population drives everything, right? If you abstract everything out. And if you look at the future, which is 2050, and you look at the populations in each continent, you'll have the America is at 1 billion, you'll have Europe at 1 billion, you'll have Africa at 4, and you'll have Asia at 5 or 6, which means that eventually the money will follow where the people are. That's what always happens. And India is a very large country. And so if you're betting against India, you're kind of betting against the world in the future. So like just simple math, I know it's a like just a population number, but for me it's super powerful because that's how things will evolve. So I like we keep on talking about demographic dividend and all those things. This is the reason why it's important. Now, when you go a little deeper in India, you look at our population composition. We are the youngest population in the world in terms of number of young people. Obviously, Africa has younger populations, but if you just look at millennials, the number of millennials we have is more than the population of the US. Now, if you can unlock this group of people to create value, I don't know how big an outcome you can have, right? You have 400 million young people who have aspirations, ambitions, things like that. You can take them anywhere, right? So India, globally large population, very young population. We've actually got a fascinating enabling environment for all the education criticism that we hear in India. The IITs, IIMs, a lot of top tier colleges for such a young emerging country is super hard, right? I mean, we all celebrate Indian origin CEOs and things like that. That's their products of the Indian education system. So I think our focus on science as well as technology very early on will take us a long way. And I think our educational system has been decently good. I know a lot of people are like, what the hell in India, right? So I think like these are the 2, 3 things. And then you have this really ambitious young group, which is now starting to look globally, which is my whole tech thesis. So I'm a big India bull from a macro perspective. Now, what do I think are the challenges? I think, like they say, it's ours to lose now. So we can like lose it with multiple things. I think, if policy intervention is not smart enough, if we do things that could constrain innovation or diversity or, just building out stuff in India, I think it's going to be a big challenge because the way we create the next, 10 trillion in India is going to be new companies, in my opinion. So I know, this present government is trying a lot to be open to SMBs, but sometimes you just like start doing stuff which can hamstring innovation. For example, I'm not sure how they're thinking about crypto. There's a lot of confusion about it. I think the US has taken a more interesting approach. India generally has been very forward in finance. Like if you look at our UPI or India stack, it's world class, right? But here on this thing, I don't understand. So could this spill over to other stuff? I don't know. I think the other thing is sometimes we lose sight of the fact that you need to enable an environment for anyone and everyone to build. Will India provide that conducive environment? Will we be able to attract talent, or even internally, like everyone feels safe to build those kind of things? I think that's probably my second challenge in terms of like an enabling environment. And I'm just talking about business. I'm not talking about politics and other stuff. Because you asked me about why you're an India bull and what could be the challenges. I think from a policy perspective and in terms of like a safe environment for people to build, I think these 2 things have shown signs sometimes that it might be a bit challenging for folks in India, right? Like, why do people leave India? Many times they just say that I can't live here because of XYZ reasons. Can we somehow create a more conducive environment for those people to stay? So macro level, very positive. I think it's almost written that we will be a superpower. The question is really, do we have missteps and create stupid obstacles for us in that path, which I think could happen for those two reasons that I mentioned.
Yeah, no, thanks for sharing all of these thoughts, Aviral. Thanks once again for tuning in at 7 a.m. In your part of the world.
No
And thanks
problem.
to everyone who joined here. I know it's really late at night. Ben, Saurabh, Emily, Claudia, others. Thanks for joining despite the late time. I thought that this 9:30 p.m. US time, 7 a.m. India time was a good sort of middle ground between both cases. As next steps, I'll upload this conversation on YouTube for those who might want to revisit it. And other than that, please feel free to either be in touch with Aviral or me. And yeah, thanks a lot, Aviral.
Awesome. Thank you, everyone.